My name is Toi Holliday, and I'm a local realtor in Los Angeles. I service clients from Los Angeles all the way through to the Inland Empire. I specialize in working with investors, buyers, sellers. If you have something to sell, I will help you sell it. And so I want to welcome my first guest, Cheyenne. He
Hi.
is a mortgage lender, broker expert. And so I've asked him to come on and give us a little update about the what to kind of expect during this season with the coronavirus at this particular time, because I know a lot of people are afraid, they're nervous, they're like, oh, I don't want to buy, I don't want to sell, I don't know what's going on. And so just over the past couple of days, from the first time of asking Cheyenne to come on and partner with me on this quick meeting here online, a lot has changed over the past couple of days. So,
Yes.
Cheyenne, I'm going to go ahead and let you talk and, kind of give people an update on what to expect over the next coming months.
Fair enough. Okay. So, hello, everyone. My name's Cheyenne. I've been in the financial services industry since 2003. So I have seen some ups and I've seen some downs and I've seen some in between. So, one thing's for certain, no one alive today that I know of anyway, has been through a global pandemic. So definitely something new for everyone. The uncertainty that has been out there, a lot of the scare, a lot of the fear has been that because people are homebound and there's not enough people in the workforce, that it's really diminished the stock market. Well, the stock market fall that we've seen from our 401ks and what you see on television or hear in the news has a lot to do with fear and speculation. And so a lot of people really bought into that fear bait and they started selling off their stocks. Well, that was a bad idea. You let it climb and then now you watch it fall, and that's unfortunate. So really, with the stability of our U.S. government stepping in and creating this stimulus package, it's unprecedented. Nothing I've ever seen like this before. Nothing anyone has ever seen before. But it's a financial package to upgrade and to stimulate travel. So we're going to have train, railroad, cargo, and passenger stimulus there. Aircraft with cargo as well as passenger support there. We have financial sector backing. We also have other sectors to include education. So there's a huge stimulus. It's not just a few people. It's not a few thousand people. It's millions of people nationwide. So now that that's there is stability. We have kind of a flat line now, and now it's a matter of climbing back up. So the good news is we found recently over the last few days, in fact, well, since yesterday, Toi and I had a conversation. We have a stable platform now to work from. Banks now have financial stability from the U.S. government. There's some quasi-government agencies known as Fannie Mae and Freddie Mac. We have funding from them. We have stability from them. VA, USDA, FHA, they're also doing buyback securities. So all of the funding and all of the backing from the U.S. Treasury is going to assist with that. So over the next couple of weeks, and specifically over the next few months, now that we have this stable platform to go from, once we have a cure, or at least what do they call those? And not an anecdote, but help me out here, Toi. What are they called? When you go to the doctor, you get a booster shot, and it's to prevent you from getting the flu or some of these other, like polio or what have you, a vaccine.
Yes,
So once this vaccine is approved, which we already know that there's some pharmaceuticals working on those. Once that's in play, that will really stabilize things. People going back to work, kids playing at the park, going back to school. These things will really help us out over the next few weeks and next few months. And then, of course, with values and that will continue to stay stable. And then I could see potentially toward middle and late summer an increase in values and equities.
Wonderful, wonderful. So we have a little bit of a slowdown with people moving, because right now spring is usually the high peak season when you see a lot of new buyers going out there. School is about to end, and they're like, okay, now we're gonna get that new house, baby, and we're gonna be in a new school district. So now that is kind of like on hold a little bit.
Sure.
But just over the past couple of days, I have been getting notification buyers are still looking. Buyers are still looking. I actually, right before we went on the Safer at Home order, I actually showed a couple of properties, and just from that one, I just wrote up an offer the other day. So I'm keeping my fingers crossed that that one is going through, but people are still looking. They're still looking to buy. I know people are really nervous, but we're gonna definitely work through this. So
absolutely.
I like to always keep an optimistic outlook on things, even though it looks, a little gray, but hey, we just got to look past that and keep on moving forward.
Absolutely.
Let's see, one other thing I want to talk about. Let's see here. Okay, you talked about the stimulus package. Let's talk about homeowners. Those who have potentially been affected, those who probably cannot work, or their business is in jeopardy and they're not generating as much income as they were, prior to our current global pandemic. So they're not able to pay their mortgage. Can you talk about what the mortgage industry is doing as it relates to their payments being deferred or put on hold?
Yeah, so once again, another unprecedented circumstance, but the U.S. government is putting a recommendation, and pretty soon it'll be a mandate for financial institutions, the big banks, Chase, Wells Fargo, Fannie Mae, Freddie Mac, FHA, even student loans for giving a deferment, where the U.S. Department of Education, Nelnet, big institutions like that, where they're going to postpone 1 to 2 months until stimulus comes in or until people get back to work. So it's not just mortgage; it's every industry, auto industry. Every financial piece is going to be affected. And so by allowing deferments, just like with a student loan for 6 months, for example, those things will come into play. It's just a matter of putting all the pieces where they need to. But this stimulus package should provide that.
Wonderful, wonderful, excellent. And for our buyers, I would like for you to talk a little bit about the different down payment assistance programs. I always have people when they come to me, what type of programs do you have? Because people have money, they have this huge amount of money, each month that's coming in, but they may not have that $50,000 or that $100,000, depending on, what type of home that they're buying and the cost. But they want some assistance. People like things that they can, something like an incentive or, some sugar on top of the cake. So what type of down payment assistance programs? I'm like, oh yeah, you guys have out there right now. I know you specifically work with a lot of different down payment assistance programs. And that is one reason why I felt like partnering with you would be like the most amazing thing ever. And I have had nothing but positive reviews from you, people that I have referred to you, and I'm really, really excited. So I want you to talk about the good juicy down payment assistance programs.
Absolutely. So California, throughout California, we have counties that have down payment assistance programs. We also have regions that have them, but we also have we have 2 major statewide programs that provide down payment assistance. The minimum qualification credit score to qualify for CalHFA, which stands for the California Housing Finance Agency. They're a nonprofit organization. They've helped over 100,000 homeowners buy homes with down payment assistance. They provide, if you go conventional, if you have a high enough credit score, 3% down, which is that minimum you would need as a first-time home buyer. And if you go FHA, which is maybe a little bit a lower FICO score, or maybe the income isn't quite as high as it would be for a conventional home loan, then FHA will allow you to get a home loan through them. Their minimum down payment is 3.5%. They provide both of those. So the buyer who wants to put an offer in on property A instead of having money in their pocket, though they have a good credit score and they have good income and they have good, they have a good monthly residual income. But the unfortunate piece is they just don't have the down payment. GSFA and CalHFA will come in and assist with that down payment. The difference between GSFA, which is the Golden State Finance Authority, and California Housing Finance Agency, is one is a grant. So one is one you don't have to pay back, and the other one is a second mortgage, which you will eventually have to pay back. But the benefit to the buyer in both situations is they don't have to come out of their own pocket. These agencies will assist with that. With GSFA, you're required to live in your house for at least 36 months. So that's 3 years you live in your house, and that grant is forgiven. Typically with GSFA, the rates are going to be a little higher because you don't have to pay back this down payment assistance. With CalHFA, the rates are a little lower, but you have to pay it back either when you sell your home or refinance it in 5 or 6 years from now.
Oh.
But both are fantastic programs for first-time home buyers.
Oh, that's awesome. Now, do they have any type of income limits? Like you can only make $120,000 or less, or you're capped at $150,000, or you're capped at $80,000 for your combined income? What are the income limits?
Great question. So if there was an income, let's just say that we have a buyer who has a $200,000 or $250,000 income, but once again, they don't have a down payment. GSFA is the way to go. GSFA has no income restriction, but they do have a requirement that it is your first time, or it will be your primary residence as a first time buyer. Whereas with CalHFA, it's specific to each county. I have a list based on the counties, but for example, with Sacramento County, you almost hit the nail on the dot there with $150,500 being the max income for a family in Sacramento County. Los Angeles County is going to be a little different. Riverside County is going to be different. What are some of the other counties down there? Orange County, San Diego County, Riverside?
Yes, Riverside, San Bernardino.
San Bernardino County. So every county is going to have its limit with CalHFA, but when I have those conversations with the buyer, when I'm getting them pre-approved, it's based on where the property is. It's not based on where they currently live.
Okay, awesome. Now let's see, my next question is, let's see, I didn't even write this one down. I should have written it down.
It's okay. Shoot off the hip.
Shoot off the hip. Okay, so how about qualifications criteria? What should a buyer look for in order to even be prepared to even think about, buying a home?
Yeah, so down payment, we don't have to concern ourselves with. So don't concern yourself with the down payment. If you don't have the money, that's not a concern. Don't beat yourself up about not having down payment. That's okay. Where we do want you to focus is your credit score. So with GSFA, we need a minimum FICO score of 620. FHA all by themselves, if you have money, let's say you have $25,000 in savings account or in a 401k, that's great. We can use those funds. In that case where you don't need a down payment assistance, we need a 580 or higher FICO score, 580, which is, that's very reasonable. However, if you need the down payment program assistance, you need a score of 620 or better. And if you want the higher tier with the lower PMI costs, so anytime you're a first-time home buyer and you're not putting at least 20% down, or if you're not a veteran from the U.S. military, you're going to pay an extra premium known as mortgage insurance. And the lower your score, the higher the premium. The higher your score, the lower the premium.
Awesome. Now, speaking about veterans, I have a soft spot in my heart for veterans.
So do I.
Oh, yes, that's right. You're a vet.
That's right. For 6 years in the Marine Corps.
Awesome. Wonderful. Well, I salute you. Okay, so what type of program or what's the criteria for a veteran? How would, they get it? Hey, I've been out here, because I know people who have been out of the service for maybe like 20 years and they just never really thought about buying a home, but now they're like 55 or 60 years old and they're like, oh, I think I want to buy a house.
Right.
What do they need to get started?
So there's a lot of people who maybe they served in the National Guard, or they were like a Navy Reserve or something like that. Like you said, 20, 30 years ago, when they just kind of had it in the back of their heads. So as long as they had a good service record, and as long as they had an honorable discharge, or if they were disabled when they were discharged, if we get a disability discharge or an honorable discharge, and we can prove through their veteran documents or from their Social Security that we can send a request to the Veterans Administration just to confirm their time in service and their method of discharge. If we can confirm those two things, well, three really, to prove that they were in the military, to prove that they were honorably discharged, or if they were disabled, then we use that as evidence to get them into a veteran home loan program. So the benefit to them is, unlike with traditional home loans where a down payment is required, veterans are not required to pay a down payment. They're able to get into a home with zero down.
Wonderful, wonderful. Well, it looks like our time is up. I promised 15 minutes because I know that you have another appointment to get to, and so do I. But I want to say thank you to Cheyenne for joining me for these few minutes to talk about what homeowners and what buyers can expect during this global pandemic, COVID-19. So keep an optimistic outlook on life and just know that there's great things ahead. So don't be nervous, just keep on moving forward. And thank you again, Cheyenne, for joining us. I really appreciate it.
You're very welcome.
Thank you.